Have you ever wondered where your money goes when you buy a stock? A stock is a piece of ownership of a company that's primarily used to raise money. In the private market, instead of taking out loans for growth, businesses offer ownership sold as shares to private investors to raise money. If you own a share of stock, you own a piece of that company. In a simplified model, the percentage of the company that you own dictates how much of the profits you'll receive. The money that's paid to you is called a dividend. Not all companies pay dividends to shareholders, but a lot of them do. So for example, if you own 10% of the shares and the business profits $100K, you would receive 10 grand. As the business grows, they usually go through several fundraising rounds where they basically trade ownership of the company for more money to grow. Eventually, the business gets to a point where it needs to raise so much money to grow that the company decides to let the general public invest rather than look for more individual investors. This is called an initial public offering, or IPO. It's when a company first lists their shares for sale on the stock market. As part of the IPO process, companies issue a finite total number of shares. During the very first part of the IPO, you're buying shares directly from the company. Once the company sells out of those shares, the money no longer goes to them. Instead, when you buy that stock on the exchange, you're actually buying it from real people and not the company itself. At this point, the company isn't directly affected by the share price. It only affects the investors. However, the executives usually keep a percentage of the company's stock in their own portfolio. So while the company itself isn't affected by the share price, it does affect the people who run the company. This is what's actually happening in the stock market. When you buy a share, you're actually buying it from a person who is willing to sell it to you at the current price. When you sell a share, you are the person willing to sell it to somebody else.